Markets today. I'm Sakshi Batra, and on this show, we discuss everything about the stock markets, how the day panned out, and where were the highlights seen, where were the gains and losses seen, and what should be your strategy now as we move forward from here. What are the news flow impacts that you're seeing on specific stocks? All of those will be discussed. A very special guest joins in. Mr. Kranti Batini joins in. He's the equity strategist at WealthMills Securities. Welcome, sir, and thank you so much for taking the time out. Before we begin to discuss, how are you looking at the overall market setup, and where are the focus areas that you believe investors should now keep an eye out on? I want to just wrap up the day for all our viewers in just quick one or 2 points. One, Sensex managed to end sharply higher today with 1344 points of a gain today, 2.5% uptake. The markets have really rallied today. 54,000 crossed on the closing level. In fact, 54,318 was the closing level for the Sensex today. The Nifty also managed to gain 417 odd points, or 2.6% up in trade. And 16,200 was achieved on the closing basis yet again, 16,259 at the closing level. It was the metal names that shown the brightest impact in today's trading session. It was Hindalco, Tata Steel, some of the other commodity names like Coal India, JSW Steel, and ONGC among the top Nifty 50 gainers. All the sectors, in fact, ended in the green, with metals rising sharply by 7 odd percent, and other sectoral indices up by 1 to 3 odd percent too. The broader markets were also seen higher by 2% each, although the biggest news point today, Lic Ipo made its stock market debut, although at a discount of 8 to 9 odd percent, and it also ended at a discount of 7.73%. May have disappointed some of the investors, but we'll definitely ask Mr. Batini to help us understand what is the way forward for Lic now. Mr. Batini, first up, as far as the markets are concerned, help us understand the reasons behind the very, very sharp move that we've seen on the markets today.
Sakshi, if we analyze the data, definitely it shows the equity market across the globe, especially India. In emerging market space, we are in a oversold zone. So market have been waiting for a sharp recovery. That's how we could able to witness today. The Nifty could able to regain its 16,000 level, which is a very psychological and sentimental level for Nifty in the medium term. So, and also coupled with, we have good support that's coming from the global cues, and throughout the day, Asian markets and also the European markets also helped us to stay in a very positive zone throughout the day. One positive thing what we can witness is, apart from the indices stocks regaining, we can see a broad-based buying what we witnessed across the market texture and across the indices. It can be mid and small cap stocks. Because the one thing is, what we can see is everywhere the stocks are beaten down. So we can see some kind of value buying that happened, some kind of bottom fishing that we witnessed in the markets today.
Okay, some kind of a bottom fishing in the markets today. Markets seem to be in an oversold zone. So definitely investors buying at these lower levels, all of those factors playing up. The big question is how long, and will it continue to sustain or not? So that's an important point to factor in. Also, I wanted to understand the markets sustained this rally despite the negative macro data coming in as far as inflation is concerned. The WPI inflation coming in at 15 odd percent, the highest ever. Help us understand, could these kind of concerns and the relative action by the RBI on this high inflation, could that be a deterrent for the markets going forward, or is that priced in?
Yeah, well, the WPI information that came in today, its markets are, as I told you, markets are in a oversold zone. Market able to could discount the data of news flow that came today. So what we can see in the coming days is how aggressively RBI is going to take a stance with respect to inflation is concerned. Of course, RBI in their initial stage, the commentary was they are always pro-growth for the respect to the growth of the economy is concerned. So market is eagerly waiting how the stance of RBI with respect to their rate hikes are concerned. Probably is another 50 to 75 basis points a repo rate hike, and market could able to digest immediately with respect to the sharp falls we witnessed in the market. But going ahead, we need to see the data, how the crude is the main joker in the pack for Indian market, how crude is going to cool off, or it's going to stay which level. It is a crucial thing one need to wait and watch in the days to come.
Okay, understood that. Also, sir, the biggest news point of the day, LIC finally made its stock market debut, the much anticipated IPO and the listing as well. Although, just like how most of the fears were in the gray market premium, we did see a discounted listing of 8 to 9 odd percent. How are you looking at LIC shares now post the listing for investors who got the allotment and may have not got handsome profits on the kind of allotment that they have made, and also for fresh investors who may be looking at an opportunity on LIC after the listing? What will your advice be?
Sakshi, first of all, LIC is on Indian stock markets finally after a very long wait. That is
Yeah.
good news. But one need to see the size of the IPO and the market of the cap of the company. It is 5.5 lakhs crores. So one cannot expect a listing gains for the size of the 5 lakhs 50,000 crores. But if you see the listing, the entire thing, it's a disappointed listing, I can say.
Yeah.
And it given a lukewarm response on the day of listing. But we need to see how the institutional are going to take a pie of LIC in the days to come, because it gives a complete India-centric and India's growth story we can see in LIC. Given the size of the business and the nature of business they are in, and how the equity markets are going to perform, because LIC is a largest institutional investor in Indian equity markets. So all these points are going to play in LIC in the days to come. So those people who got the allotment, don't lose your heart, stay on to the stock. And those people who want to accumulate further, probably they can see how the play is going to come in LIC in next couple of weeks' time. So they can take a stance. It's not the stock to ignore because it had a tepid response on the day of listing, but it's the stock to watch on because of the size of the scale, how the FIs are going to behave with respect to Life Insurance Corporation of India is concerned. So my message to the investors is just stay on and wait for next couple of weeks how the stock is going to be positioned.
Okay, understood that. Also, one more point, the metal index shown very, very bright today, 7% up move right here, and pulling up the entire commodities basket with itself too. Help me understand what is your view in the metal space. We had seen a very, very sharp up move in the previous bounce of the markets and the previous leg of the rally in the markets, especially led by the metal pack. After a pause, do you think the rally is again coming back to the metal pack?
Sakshi, if we see the metal, the main reason for today's that vigorous bounce back is metals are they lost nearly 15 to 20% in last few weeks, and also the news that surfaced today is opening up the Chinese economy and some cities. So that gives us some fillip for the demand for metals are concerned, and also the global the crisis that's between Russia and Ukraine. They also create some kind of a shortage in terms of the production. So metal story is going to stay. The cycle is at the middle of the rising cycle. So investors can stay on, and every dip they can add with respect to metals are concerned. It can be base metals story is concerned.
Okay, understood that. Well, on that note, thank you so much, Mr. Batini, for speaking with us and sharing your views on the markets and the strategies that investors must adopt in this current environment of the stock markets as well. Thanks a lot for being with us.
Always a pleasure to speak to you, Sakshi.